Hello and welcome to Follow the Money. I'm Raine Musñgi. Join us as we explore the tools and insights you need to jumpstart your financial journey. Bitcoin pulling back from all-time record highs. The world's largest cryptocurrency has slipped to $96,000 after crossing the key milestone of $100,000 Wednesday. It's after U.S. President-elect Donald Trump said he intends to nominate cryptocurrency advocate Paul Atkins to be the next chair of the Securities and Exchange Commission. In a social media post, Trump took credit for the crypto surge and congratulated Bitcoiners. He added that together they will make America great again. He also named David Sachs as White House AI and crypto czar to work on a legal framework for the crypto industry to thrive. Well, Bitcoin's price surge reflects a coming-of-age moment for digital assets. An analyst at S&P Global points out Bitcoin was not on the roadmap of traditional investors before, but now that has started to shift.
So now we're really talking about an asset that is no longer an outsider. It's an asset that's part of the financial decisions that investors need to make. Investors need to have a view as to whether they want to hold Bitcoin or not. And that narrative has then followed into the U.S. election and the outcome of that election. Clearly, there's anticipation that the new administration is going to be somewhat more favorable to crypto than the old administration was, and that's kind of supported by the wins in the White House, the House, and the Senate for the Republican Party. So for the price of Bitcoin, I think that's what's driven the trend so far, likely continue into the new year.
For another expert, Bitcoin's rally could be seen as a rejection of established values.
The ground that we've been standing on is moving, and these shifting sands, and in this kind of turmoil, we don't know really what's going to be the winners, what's going to be the losers. And I think that in this, and when you're rejecting it, like many of the elections, especially in the industrialized countries this year, have rejected the incumbents. And so I sort of see Bitcoin as part of this rejection of sort of the established values. And not just the values of society, but really of the elites.
U.S. stocks ended down slightly in Thursday, with UnitedHealth down sharply, technology shares easing, and as investors awaited Friday's job report. UnitedHealth was the biggest weight on the Dow and S&P 500, while other insurers, including Cignal, were down as well. Health insurance companies are reassessing the risks for their top executives the day after the murder of UnitedHealthcare CEO Brian Thompson in Manhattan. UnitedHealthcare is part of UnitedHealth Group. Now, shares of Synopsys fell after the chip design software firm forecasts fiscal 2025 revenue below Wall Street expectations, in part due to a slump in China's sales.
So when it comes to market valuations, we think things look a little frothy right now, especially with the S&P trading at 23 times next year's numbers. And because of that, we think there's some digestion going on here at year end. There's not enough reason to sell the index as a whole, simply because you have regulations that are going to get cut next year, and you're also in a Fed cutting cycle. So it's really tough to sell outright right now, but it's also tough to hit the buy button, at least at the index level. So we think that earnings need to catch up in the near term for the index to be worth its valuation and at least see the index go higher. There's still a lot of opportunity underneath the surface, in our opinion. We happen to like software, we like biotech, and we like cybersecurity right now. Those are the three big sectors we want to see our managers be exposed to. But other than that, at the index level, we think this is a good time to take a look at a pause.
Well, health insurance companies are indeed reassessing the risk for their top execs after the murder of UnitedHealthcare CEO Brian Thompson on Wednesday. Both UnitedHealth and rival CVS Health removed photos of their leadership teams from their websites after the shooting. Thompson's wife, Paulette, told NBC News on Wednesday that he had been receiving some threats related to his job and coverage, but said she did not know the details. The gunman, whose crime was recorded on video, is at large And the New York City Police Department has released photos of the gunman for any leads that could lead to his arrest. Detectives found cryptic words, deny, defend, and depose etched on the shell casings at the scene.
Some companies really value securing, and especially in an industry like healthcare where you're denying people coverage and there's a lot of animosity with that. Or if a company fires, say, 5,000 people, again, now you have 5,000 insiders with information into the executives that may be angry.
Meanwhile, a federal judge rejected Boeing Company's plea deal that sought to let the plane maker avoid criminal prosecution over 2 fatal 737 MAX crashes in a surprise twist that threatens to prolong the company's recovery from past scandals. In rejecting the plea deal, the judge cited provisions in the agreement related to the selection of the independent monitor, including language directing prosecutors to consider DEI, diversity, equity, and inclusion policies. Bloomberg reports he also took issue with requirements that the monitor answer to the government rather than to the court. Families hope the judge's rejection of the plea deal puts an end to the kid glove treatment of Boeing by the government. Earlier this year, Boeing had agreed with the U.S. Justice Department to plead guilty to criminal conspiracy, pay a fine, and install an independent corporate monitor. Plus, the company would have been required to spend at least $455 million to bolster its compliance and safety programs. Meanwhile, the head of the Federal Aviation Administration said that Boeing has not yet resumed producing 737 MAX airplanes following a machinist strike, but plans to begin later this month. The stock has lost about 39% of its value this year, the biggest decline in the Dow Jones Industrial Average. A Colombian coffee farmer federation dismisses any negative impact from the next U.S. government led by President-elect Donald Trump, despite the leader's embrace of tariffs and a more protectionist approach. At the start of an annual coffee conference in Cundinamarca, Colombia, Federation head Germán Bahamon said they're not expecting any change to the export policy of the U.S. The U.S. and Canadian markets account for about 45% of Colombia's foreign coffee shipments. The crop's value should total more than $3.14 billion. Colombia is the world's top producer of washed Arabica beans, well known for their high quality and aromatic properties.
We hope that the policymakers of the U.S. government continue to see Colombian coffee as a reliable source for the American consumer. We are not anticipating any changes at this moment in export policies to the United States. Coffee is once again the protagonist of the country's economic development. So far, in the first 2 months of this quarter, the value of the harvest increased 108%. That indicates that the GDP of the fourth quarter will continue having coffee as a protagonist of the national economic recovery.
Colombia exports coffee everywhere. Everywhere there is Colombian coffee, everywhere there is a person who asks for Colombian coffee. So I think that on that side there should be no fear.
Our next big headlines in business and the economy in the next minute. Stay on BNC and follow the money.
This is The Scorecard,
where you score the latest sports news
and in-depth views. I'm Anton Rojas.
I'm Erica Christensen.
Get ready. Be prepared. Get to the latest stories, updates, and reports about what's happening in the world of sports. Hosted by Anton Rojas, Erica Christensen.
Where sports is our business and business is our sport.
The Scorecard, 9:30 p.m. on BNC, the Bilyonaryo News Channel.
Good evening, I'm Pinky Webb. Tonight we ask the questions, what does the investigation cover? We tackle the issues.
The president's immunity from suit is absolute.
We clarify matters and we get on point.
Watch his press con. Sinabi niya na ayaw niya ng kudeta.
What is questionable about the AR, sir? The Vice President keeps insisting walang active threat kung hindi ako mamamatay.
Tignan na lang natin, mahirap pang pangunahan eh.
Pinky Webb, on point.
Welcome back to Follow the Money. European Commission President Ursula von der Leyen met with Uruguayan President Luis Lacalle Pou on Thursday, seeking to finalize a long-delayed trade deal between the European Union and South America's Mercosur bloc, even as France slammed the agreement as unacceptable. The deal, 20 years in the making, would create one of the world's largest trade partnerships and turbocharge the flow of beef and grains. 4 South American and European sources involved in the talks said the deal was done and would be announced on Friday by Mercosur leaders and von der Leyen, now that both sides had ironed out final details on environmental issues and government purchases. Von der Leyen, just days into her second term, does, though, face stern opposition at home to the deal, which would be the largest struck by the EU in terms of tariff reductions. EU countries as a whole and the European Parliament would have to approve any trade deal agreed. European farmers have repeatedly protested against it, saying it will lead to cheap imports of South American commodities, notably beef, which is not subject to the same green and food safety standards as in the EU. Thousands of people protested on the streets of Paris on Thursday against cuts in the civil service. This comes a day after left and right, or far-right parties in parliament brought down the French government. They say they won't give up against budget cuts, regardless of the next government. It was disagreements over the budget which sought to rein in France's spiraling public deficit through 60 billion euros in tax hikes and spending cuts, which brought about a no-confidence vote in Prime Minister Michel Barnier.
Now there are deficits and inflation that the government itself provoked. Now we are asking civil servants and the people generally to soak up the debt. And that's just not possible. Everyone needs to take responsibility.
The answer isn't the right one. In our opinion, it needs to be done through tax. We work in public finances, and we can see that there's lots of tax relief and things which are given to companies, those with the highest salaries, which aren't efficient, and we live like.
And also, there's always the thing about reducing the number of civil servants. But in the end, we reduce the quality of public services. And in the end, we say, but look, our public services don't work, so we need to reduce budgets. But that's not how it works.
In South Korea, President Yoon Suk-yeol's short-lived declaration of martial law may have economic and financial ripples. A local economist cautions that the fallout may affect investors' confidence and trade relations. According to Yang Jun-suk, an associate professor of economics at the Catholic University of Korea, the turmoil may have minimal impact on the country's real economy, but could leave a mark on politically sensitive sectors like finance. Investors and trade partners may now be more cautious, and businesses may call for stronger safeguards against political disruptions. Local small businesses, already struggling with inflation and global economic challenges, are bracing for potential knock-on effects. The nation's largest labor union, with roughly 1 million members, are on indefinite strike, calling on President Yoon to step down from office.
It's ended up being more of a surprise than with any kind of a large effect on the real economy. So on the production side, we shouldn't see that many problems. But for anything that deals with political uncertainty, the problem will probably persist for a long time.
OPEC Plus is accepting that its mission to defend oil prices will probably drag on much longer than expected. The group, led by Saudi Arabia and Russia, agreed for a third time to delay the revival of halted production and slow it down. At an online gathering on Thursday, the group said it would unwind its current production cuts gradually from April 2025 until September 2026, a full year later than originally envisioned. That's as demand contracted for 6 straight months in top consumer China, while U.S. production hit new highs and a wave of fresh supply came from Brazil, Canada, and Guyana. Bloomberg reports oil prices have plunged 18% since early July to trade near $72 a barrel in London. Citigroup and JP Morgan Chase have predicted that crude will keep sliding into the $60 level next year. Here at home, the number of employed persons in the Philippines climbed to 48.16 million in October. The employment rate is at 96.1%. On the other hand, unemployment rate rises to 3.9% from 3.7% in September. This translates to 1.97 million Filipinos. Underemployment is also up at 6.08 million, or 12.6%. European firms show optimism about the Philippine economy, with plans to increase local investments in the coming years. That's despite identifying persistent challenges like complex regulations and high business costs. Soo-Jin Kim has the details.
A resounding 85% of members of the European Chamber of Commerce of the Philippines, or ECCP, are planning to increase their trade and investment in the country over the next 4 years. Citing infrastructure growth, sustainability initiatives, and alignment with global standards as key drivers.
So a lot of the growth that we're seeing in this economy is coming from about 7 years of investment acceleration, of fast growth in investment, both public and private.
The Build Better, More program of the government will continue to spur capex investments. And there have been 194 projects with a combined value of 8.1 trillion, which have been identified as opportunities in this sector.
The region is seeing a gradual recovery in exports. The World Bank says exports will continue to be a source of growth in the short term.
Orientation to China is also changing, in part because of the decoupling of China-US. You see an increase in the share of exports from China that come to ASEAN countries, but also to the rest of the world.
Another contributor is the banking sector, which had a positive outturn for the year, with total banking assets growing more than 12% year-on-year. It is expected to grow even further in 2025 with a decline in interest rates.
Philippine banks will end 2024 with strong earnings, with adequate capital and excess liquidity to finance further economic growth.
However, European companies say that while there are improvements in the ease of doing business, challenges such as inconsistent regulations, geopolitical instability, skill gaps, and rising operational costs remain, highlighting the need for labor upskilling, energy reform, and climate-related policies.
There are many reasons why climate change is affecting the growth potential of the economy. Decreases in yields in agriculture, large negative effects on productivity of firms that are in flood-prone areas in the Philippines. The effects are large, particularly for small firms.
Firms also see the resumption of the EU-Philippines free trade negotiations as crucial to unlocking economic potential. The agreement is projected to bolster bilateral trade by up to 6 billion euros and create as many as 250,000 local jobs in sectors such as garments, agriculture, and digital trade. Soo-Jin Kim, BNC.
Meanwhile, Export Development Canada, or EDC, a state-owned export credit agency, opens its first office in Manila to enhance trade and investment ties with the Philippines. This move is part of Canada's strategy to expand its business presence in the Indo-Pacific region. The announcement came during a trade mission at the embassy in Manila. In its first major initiative, EDC signed an MOU with Ramon Ang San Miguel Corporation to promote partnerships between companies from both countries. The Manila office joins EDC's network of global locations, including Vietnam and Singapore. Finally, Sotheby's will host its first auction of American football star Tom Brady's watch and memorabilia collection. It's the first time that a sports celebrity has ever done a single-owner sale of timepieces and sports collectibles in this range that we have here. Sotheby's senior watch specialist says Brady's collection features 21 watches, showcases a diverse range from sports to modern to vintage. The collection includes an Audemars Piguet 99 Royal Oak, the Roast, personalized with Brady's name in diamonds. It is estimated to fetch between $400,000 to $800,000. In addition to the watches, visitors can experience a piece of history.
It is an Audemars Piguet Tourbillon with his name on it. It has a guilloche salmon dial. His name is spelled out in diamonds, Tombrady, and it also has 7 for the number of Super Bowls he won in sapphires. So this is a very important vintage Patek Philippe pocket watch from 1917, made for the American market with a Tiffany & Co. stamped dial. It's a triple calendar. It has a minute repeater, perpetual calendar, split-second chronograph with an enamel dial. It is very special for Sotheby's and myself. It's the first time that a sports celebrity has ever done a single owner sale with timepieces and sports collectibles in this range that we have here.
There's an amazing wristband that Tom Brady wore when he won the Super Bowl and was down 28-3 and sort of willed the Patriots back to a victory. We've estimated that at $120,000 to $180,000. I think to touch something like this, you're really touching a piece of history and American pop culture. And all of these things tell a pretty incredible story. And so when you hold them in your hands, you feel that.
The exhibition will run through December 10th, with the auction set for the evening of that day. And that is it for today's edition of Follow the Money. I'm Raine Musñgi. Thank you so much for watching. Keep it here on BNC, the Bilyonaryo News Channel, always on top.